Hello everyone. This is the pre-market report video for today, April 27th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday morning, SGX Nifty indicates the gap down opening. However, spot market opened flat and Nifty was completely driven by Bank Nifty. If required, please pause it and have a look. Both the curve, Nifty and Bank Nifty, is just exactly same. In the end, Bank Nifty recovered and so does the Nifty. It closed positive of over 17,800. Sector-wise, it just metal down by near 0.5%. All other either near flat or increased less than 0.5%. Finally, after 6 days of selling, FII turned as buyers. The net bought shares worth approximately 1,250 crore rupees, while now DI's net sold shares worth approximately 230 crore rupees. I just want to highlight here, so far this whole April month, FII net bought for near 750 crore rupees and DI net bought for near 1,850 crore rupees. So basically both of them either holding the same stock or they just reshuffled it for near same value. After our market house, all three US major index opened positive but it didn't sustain to the end. Just a recap. Day before yesterday, First Republic Bank dropped near 50% due to its unexpected large deposit outflow. In addition to that, yesterday it dropped another near 30%. So in 2 days, it dropped over 80% of its share value. This kind of made all the US banks to drop as well. In addition, EIA released the crude oil inventory data, which is not what the oil market wants. That, along with the recession worries, made the oil to drop over 3.5%. WTI crude from near $79 per barrel on couple of days before. At the time of this video, it dropped and trading near $74.5 per barrel. And in case of Brent crude oil, it too dropped and trading near $78 per barrel, which in turn made all the energy stocks negative. So at the end of the day, Dow Jones decreased by 0.68%, S&P 500 lost 0.38%, however, Nasdaq up by 0.43%. Nasdaq was single-handedly supported by Microsoft. As we discussed yesterday, in the aftermarket, both Microsoft and Google released their quarterly results and their stock price in the off-market, it increased by 4.5 and 3% respectively. Following that, today in the spot market, Microsoft increased over 7% due to its surprising results from cloud business. However, Google lost its aftermarket increase since they announced that they are going to do over $70 billion of capital expenditures. Anyway, now last night in the aftermarket, Facebook released their results and for the first time in the last 4 quarters, Facebook sales increased. And their next quarter guidance also exceeds the market expectation. And because of that, now in the aftermarket, in offline, Facebook share price increased over 11%, which is now the huge psychological positive. So both the IT stocks in Indian ADR closed near 0.5% positive. Regarding banks ADR, despite the weakness in US, it closed flat to positive. If required, please pause the video and have a look at it. In terms of SGX Nifty, at 3 AM Indian Standard Time, it closed at 17,795, which means it's indicating flat or 20 points gap down opening today. So that's what happened in the global market. And the next topic, Indian stock and sector specific news. Yesterday in the aftermarket house, Bajaj Finance, L&T and Voltas released their quarterly earnings. So quickly in this video, let's have a look at just Bajaj Finance and L&T. First, Bajaj Finance, they beats the market expectation. In short, on year-on-year basis, their net interest income increased by over 25%, loan book increased by over 20%, and their profit mainly increased over 30%. So overall, it's a very good strong results. Then regarding L&T, it do beat the analyst expectation. Their revenue increased by 19.4% and in addition, L&T secured 3 deals worth over $10 million. They also announced that they become a strategic partner to Airbus under a multi-year contract. All these kind of looks positive for L&T, but worth to remember, the stock already had a huge recent run-up. And the third and final information which I just come across, it's very important to know. In the last 2 months, I always had this question in my mind, why Reliance is not increasing despite other stocks were fluctuating. Now I kind of found the answer. Some of you know this and we did discuss this lot of times in the pre-market video. I mean, couple of months ago, Reliance Industries announced that they are going to demerge their financial arm into a separate company. Apparently, as per usual NSE rules, the demerger will cost $3 billion worth of money that will be outflow from the Reliance Industries stock. Now, yesterday, NSE gave the clarification that they are not going to exclude the financial division from Nifty index, rather than they are going to retain that in the index. I consider this as positive for Reliance. However, in the GDR, Reliance closed negative of 1%. As a summary, US market closed flat to mixed and SGX Nifty indicating the negative 20 points gap down opening. However, Indian ADR closed positive and Indian companies' results looks promising. Then about the things to look out, today the earnings results of Hindustan Unilever, Axis Bank, Wipro, Tech Mahindra and Bajaj Finserv are due. And in terms of macro, before the market opening, Chinese industrial profit data is due to release. Here, as long as no drastic change, we don't need to worry too much. Then, during the market hours, from 11:30 am to 2:30 pm, various Europe's business, climate and confidence data are scheduled to release. Finally, in the aftermarket hours, various very important US related data such as GDP growth data, number of pending house sales data, and usual weekly job insurance claims data. Now, coming to technical, Nifty forms a medium-bodied bullish candle with a long lower shadow on the daily charts with above average volumes. Technically, after a weak opening, the index recovered sharply. From the lowest point of the day, the Nifty recovered over 100 points. This pattern kind of indicates a buy on tips opportunity in the market. Here, please look at this long candle. It formed on 17th April. There, Nifty was restricted at near 17,850. So, breaking decisively above 17,850 level will make the Nifty likely to move up quickly to 17,900 to 17,970. Anyway, yesterday, Nifty forms the bullish candlestick pattern and made higher highs and higher lows for the third straight day. On the flip side, below 17,700, the selling pressure is likely to accelerate and might push the Nifty to the levels of 17,600 to 70,550. Then coming to moving average and technical indicator, for both Nifty and Bank Nifty in daily chart, as a summary, it's same as last 2-3 trading sessions, strong buy signal. About options open interest, for Nifty, first from change in open interest. Almost very few call option open interest were added. Small number was unwinded at below 70,800 and significant quantity of new put option open interest added at 70,650 and 70,800. It's difficult to make any conclusion based on this data. So from overall options open interest data, 70,800 got the huge short straddle and 70,700 got the maximum nearby put option open interest. Thus, 70,700 is the immediate support for this expiry since it too got some significant call option open interest. And the maximum nearby call option open interest is present at 18,000 and followed by 70,900. Hence, 18,000 is the strong resistance and 70,900 is the immediate hurdle. For Bank Nifty, based on change in open interest, some number of new put option open interest added at below 42,900 and small quantity of call options unwinding took place at below 42,800. Whereas some new call option open interest added at above 43,300. Again, it's hard to draw any conclusion from this data. However, based on overall options open interest data, we can see that 42,500 level will be a strong support for this expiry and 43,000 level will be a immediate resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.